Welcome to the Social Hotelier podcast with me, Sam-Erik Ruttmann. And today we are diving into the real forces reshaping hotel investment and development across Europe and Nordics. My guest is Henri Hakala, founder of Gokstad Advisory. Henri advises investors, developers, and lenders on transactions, feasibility, operator selection, and hotel development strategy across Europe. He's known for his clear, data-driven view on how value is created and lost in hotel projects. So, Henri, welcome to the show. Great to have you on board.
Thank you so much, Sam-Erik. Happy to be here.
So, we will cover now Europe and also cover into the Nordics. So, you follow the European hotel investment landscape closely. So, how do you see the European market evolving right now, and what signals tells you that the direction is shifting?
It's very dynamic and changing, hopefully to the positive direction. Right now, I would say Europe has been moving from the post-pandemic and rebound phase to the more normal cycle. The demand is still growing, just not at double-digit levels as we saw in 2023 and 24. People still continue to prioritize travel and experiences over goods, and that's shown clearly in the data. At the same time, new supply remains quite constrained across Europe and across the world, especially in the mid-market and strong urban locations, because of development has been so difficult to make financially viable. The combination of resilient and demand and limited supply is supporting the rates and keeping hotels attractive asset class compared to with other real estate sectors. On the capital side, the tone has been shifted from fear to selective. Interest rates have been edging down. Yields in many markets have been stabilizing, and investors are slowly redeploying capital into hotels. But they are doing it in quite disciplined way. Favorite prime location is in credentials, what gives you a premium of other hotels. Clear value add angles rather than buying anything with bed and breakfast, to be honest. That said, the volumes have not yet reached the levels that we hoped for or people forecasted earlier this year. But I think that's happens to every sector, largely because of the persistent valuation gap between sellers and buyers. But overall, I have to say, luxury has been booming in recent years. Family offices, high-net individuals have been buying and spending money in hotels. But I think the next big step is going to be the extended stay segment that is expected to grow by 10% annually for next 10 years or so. So this could be a next big opportunity in the market where we could see developments go forward.
Well, that's very interesting. How do you see the difference between urban locations to resorts? Is there any preference now, the investors, whether they maybe are looking at it is a more cost efficient to take a resort because it's actually cheaper than go to a major world city and where you have already very, very expensive land costs and so on?
Depends on the angles. Right now, I would say a lot of investors are looking at existing assets. Existing assets are quite often placed in the cities. So if you change the operator, have small renovation, you can have a clear upside. Resort market has been quite attractive, especially in Southern Europe over the years, but you don't have existing assets there. So it has been quite a lot of greenfield developments. For both, have quite attractive angles, but investors are selective in both ways.
Okay, so let's move from the macro picture to the development landscape, which you said is still challenging. You mentioned that the hotel development remains difficult despite strong demand fundamentals. What are the main forces making the new development so hard to execute today?
So we covered, I think everybody has felt hotels ADRs and rates have been going quite high across the main cities in Europe. But despite the strong performance numbers, development remains the toughest part of the hotel market. Largely of these four main reasons. First, the cost side. Construction costs are still and expected to remain relatively high. Development timelines have expanded over the years, and that all puts significant pressure on the returns. And on the second reason, The financing environment has changed quite drastically during the pandemic. Senior banks have returned, but they are not lending in such a way as before. Typical senior levels LTVs for hotels now sit in between 45 to 60%. Often tight covenants and much higher scrutiny on the business plan requires thorough underwriting. On the top of that, new introduction from Basel 3 and 4 requires banks to hold more equity and against the mortgage lending. The result has been that developers need to contribute more equity and bring more expensive layers of capital to the hotel projects. These expensive layers are called private credit. It has higher rates but allows more flexibility. Third, soft but actually real important costs. It has been underlooked. ESG capex, labor has increased, insurance has increased in multiple markets. NHF's reporting requirements, EU taxonomy, and VAT increases in multiple markets, and labor shortages across the globe has caused problems in many feasibility models to achieve high enough returns. And fourth, investors often see better value in acquiring existing assets, mainly into pursue opportunistic or value-add strategies at roughly that same cost as developing a new hotel, but clear and simple upside. And there's also a track record for that location. These existing assets are also quite often easier to finance and often offer immediate or near-term cash flow rather than waiting for several years for development to complete.
Very good. You connected this with something where many investors are noticing: a lot of assets on the market, but very few transactions closing. What's holding transactions back, and what do you think will unlock the deal activity again?
That's a very interesting topic. And being a little bit optimistic, I hope we are going to see in the next 12 to 18 months much more high activity. But let's see how that's going to go. The clear issue in the gap right now is the persistent valuation gap between the sellers and buyers. Many sellers are still pricing their hotels based on 2019 yields or prime yields. Yields have been going down, but they are still elevated. Moreover, operating asset costs have risen significantly since 2019. And some hotels with leases, the lease cover ratio is not high enough to justify those yields. I've seen a few distressed sales across Europe, but that's not causing enough reaction to reset the market more broadly. Of course, the financing is become more and more expensive. And you need ESG credentials, finance, and get a bank loans. And quite often, buyers have to go for a mechanized debt or to bridge the gap in their capital structures when they're acquiring assets. So this is going to cost extra issues. On the other side of the equation, unsuccessful refinance processes will put pressure on some owners that they have to sell. And also, one big topic that people are forecasting, that in the generation shifts, as many family-run hotels, especially in Central and Southern Europe, have to have ownership changes. And if the children then want to own and operate the hotel by themselves, they are forced to sell their assets. So this could be a new opportunity for investors and operators to have a foothold in new markets on existing assets.
Very good. How big is this transition, and what opportunities does it create for brands and investors entering into these markets?
I would say currently investors and operators are increasingly focused on existing assets and conversion opportunities. In response, I think a lot of people have seen many brands have launched their new conversion-friendly concepts with more flexible guidelines, easy to implement, much faster implement, and not such a high rigid brand guidelines. For the investors, these opportunities are often more straightforward and ground-up developments, easy to finance, much more straightforward. And these usually are a clear path to improve the hotel through limited renovation or targeted facelift. And the holding period tends to be shorter compared to full development cycle. That's much more favorable for specific funds who hold shorter periods of time.
Very good. Let's go deeper into development. You said a successful project starts with a clarity on the developer's role and goal. From your experience, what are the essential elements that determine whether a hotel development succeeds or fails before it begins?
Well, that's a big question, but I would say there's multiple reasons that you can have a successful or unsuccessful in hotel development. But in my experience, one clear reason is brutal clarity upfront with all parties. First, you need to know exactly who you are as a developer and investor. Are you planning to exit at stabilized year, or are you looking for a long-term holder? The decision drives everything: specification, capex plan, operator that you choose, and even how you structure the debt plan. And second, you need grounded understanding of demand and positioning. Who's the guest? Who's going to stay at the hotel? What segment are you serving? How the market is going to change? Why the world needs this hotel in this location right now? What is the development plan? When it's going to open? In this environment where development costs and timelines are rising, you cannot simply afford fuzzy concepts, a clear plan. Third, capital stack and exit strategy must be thorough from day one. If you're counting cost per key and your timelines and yields are likely to achieve, the yields you are likely to achieve on exit don't support your IRR strategy, then you don't have a project. Just have vision or plan, but not actually strategy, how you can execute this hotel project. Finally, people have different reasons to buy a hotel, so it's very important choosing the right partners. The choice of investment partner, operating partner is critical. Different investors, whether family offices, private equity, or real estate funds, have different priorities when it comes to owning a hotel. Understanding how your development aligns with those priorities is very essential.
You have also mentioned that developers should push operators to reason, not just forecast. What should developers demand from operators early on, and how can strong storytelling improve investor confidence?
I really love that question. Storytelling is so important. I completely agree that whether you are developing a hotel or negotiating with operators, before you have secured an investor, or you need a cash flow projector, a wish list of facilities. In some cases, you already have an investor lined up, but quite often you don't have any investor ready. So you have to find an operator ready and then go find an investor. But it's really important to have the thorough understanding, the reasoning and underwriting behind the performance assumptions. Disciplined, well-supported underwriting process allows investors to understand the drivers of performance and monitor them more closely and anticipate any impacts on the hotel performance results much earlier than just trusting operator with their P&L forecast. And this builds confidence, reduces prices, and ultimately makes the project more investable for the investors when you propose the investment case for the investors.
Let's touch on team selection, something you stressed critical. What mistakes do developers make when selecting architects, engineers, or operators, and how does that decision affect risk and cost later on?
In my experience, partners selection is probably one of the most underrated risks in hotel developments. One common mistake is choosing an architect or engineer purely on price or because they have done a beautiful residential portfolio, but no real hotel track record. Hotels are operational machines, and you need a design team that really understands the back of the house flows, circulations, zoning, efficiency, and the brand requirements, and understand how you can communicate with brands, investors, and developers. And to be honest, this is a long-term game. And if you do early mistakes, you're going to pay in next 20 years or 30 years, the mistakes in double digits. Other mistake is just selecting an operator mainly for the key money or brand prestige without aligning strategy and performance expectations. If the operator standards don't match the building or the market, maybe you are over-specifying the capex or under-delivering the returns. And sometimes the highest P&L is not the best choice for the investment case because they maybe have also highest development costs. And finally, development often require often underinvest in project management and pre-opening expertise. This results quite often in delays, scope expansion, cost overruns, especially when painful when debt is expensive and timelines are already stretched. And especially in seasonal hotels where every month counts. Bringing an advisor or good architect who can challenge the budgets, value engineer sensibly, and structure contracts properly is very important and is part of the risk management of hotel projects.
Very interesting commentary. And I have seen so many projects where selecting the consultants on price only and also shortcutting, not getting the right consultants early on and just looking only at their project cost at the beginning, and they have to pay for those mistakes later on, as you mentioned. A development lives or dies based on the financing strategy. Let's look at the capital stack. How should developers think about the mix between equity, bank debt, and private credit today? And where do you see the biggest pitfalls?
That's very hard because that depends quite a lot on an equity partner and your capabilities and the project. But I think today the capital stack is in layers. The core is still in senior bank and in debt. When you have a good relationship and the bank has good understanding on the business and also on the market. But it's much thinner than what it used to be. In many European markets, senior LTV is from 50 to 60 is quite often the norm, but quite often it's not enough to finance hotel development. So you need, on top of that, private credit, whether it comes in whole loans, mechanized debt, or preferred equity. Just fill the gaps so you have a whole development package ready. And you can actually, with this structure, you can actually get up to 75 LTC ratios for your hotel developments. But also this comes with a downside as private lenders can move faster, but it comes with much higher rates because they are expecting much higher returns for lending money. But altogether, when you structure this quite well and have good discussions, not just with local banks, pan-European banks and lenders, you can find a good creative solutions for your development.
Now let's shift from financing tools to the investors themselves. How should developers decide whether an institutional investor, a family office, or a high net worth individual is the right capital partner for their project?
Sometimes, if you can choose, but sometimes an investor chooses the project. There's different ways of choosing it, but the important ways are the risk and return, the time horizon, and governance. Institutional investors typically want scale, prime location, good lease covenants, good and easy credentials, and quite predictable cash flow. They're excellent partner for core and core plus assets in city prime location and larger platforms and long-term holds. But however, it's not easy for them to develop these assets neither. Family offices often land in sweet spot for more complex and more developments and repositioning projects. They're usually more entrepreneurial, faster in decisions, gravitate more to tangible assets with a story and more historical building in major cities or high-end resorts. This could be just a trophy asset for themselves or good returns or both. People have different reasons in acquiring hotels. Financial individuals often behave in similar way through a smaller ticket sizes or sometimes just purely on emotional motives, acquiring a trophy property or just a personal connection to a location. Just purely key is the alignment of the investment strategies. You have to create the storytelling of the investment case for each investor, why they would be interested in this project and why they would want to invest, because they have had probably multiple investment cases on their shelves right now.
Before we wrap up, let's bring this to life. Can you share an example without breaching confidentiality where a development went right or wrong, and what the key lesson was?
I would say in multiple hotel projects, some projects have been done exceptionally well. Others have had certain decisions could have been done a little bit better. or differently. Because hotels typically have 3 to 5 years in period before they stabilize after they have been developed. Early stage development returns are under-focused when calculating the development at early beginning, and people don't put such high importance on the early year cash flows. And this could cause the problem that investment case could be only attractive for pension funds, but not for investors who are looking for a shorter holding period. Also, I would say very important is the transparency between all parties and creating purely data-backed information to everybody as early as possible for better decision-making as early as possible and not wasting anybody's time. And creating better solutions and finding solutions early on so you can move forward with interested and good parties. And I think this is also a relationship business in creating clarity and transparency is very important in this business.
My final question is, if you would be giving 100 million euros, where would you put this? Where would you have it invested when it comes to real estate or hotels?
In specific hotels, I would look in a location with growth potential for upside, which has an track record of an existing sales, because then you can underwrite exit yields. But also understanding how the world will look like in 10 years' time. Some areas in, let's say, Southern Europe maybe have any problems with high heat levels and shortage of water. But I would say an excellent prime location city hotels where you have conversion of existing hotel and rebranding with good management manager and brand. That could be a very good opportunity. And also the resort market with good access to airports and high barrier market is very attractive. So these two prime city location where you can have acquire existing asset that could need a little bit more love and maybe in rebranding and high barrier resort markets.
Very good. And the final question is that how do you see, when you look at Europe as a whole, if we're moving into some of the Eastern European countries, are there any interesting locations or countries that are underdeveloped and that has some attractiveness for investors to place their trust in?
I think Eastern Europe is strongly growing. There's a lot of high net individuals who are having ambition of developing hotels. The capital could be coming from there, coming inside the country. Also, international investors are looking for opportunities across Romania, especially Poland, Czech Republic. Also, the Baltic countries are slowly and steadily coming more and more prominent in the market. But definitely Poland, Czech Republic, one of these leading markets where I see opportunities growing.
Very good. Well, thank you, Henri, for your excellent insight. This has been excellent, clear, practical, and grounded in real experience. So thank you for sharing your insights. And for our listeners, if you're planning a hotel development, considering a transaction, or seeking sharper analysis of the Nordic and European markets, you can find Henri at You should find out about Henri at Gokstad Advisory. But now, where could they connect with you, Henri, if they want to develop a conversation with you about their investment interests?
Actually, they just can give me a call or find me on LinkedIn with a few of my articles. So when they see me on the street, just say hi also. But I also prefer having quick communication, quick understanding what you're looking for, how we can work together, and I can give my honest opinion on the project and what kind of solution I can provide.
As always, thank you for tuning in. I'm Sam-Erik, and this is the Social Hotelier podcast. See you in the next episode.
Thank you so much, Sam-Erik.
Okay, and now we move on to the off the mic, which is a lighter side of life after the main conversation. Welcome to the off the mic, the part of the show where we turn down the pressure and turn up the fun. I'm sitting here with Henri Hakala, an investment and hotel enthusiast with a fascinating journey across Europe. Now let's get to know the person behind the persona. and with some quirky and curiosity-driven questions. If hotels had personalities, which one would best match yours and why?
That's almost as hard as people ask, what is your favorite hotel? Because, I mean, there's multiple reasons to stay in different hotels. And there's, of course, I mean, of the hotel feeling. And of course, and then coming from the financing side, and in what is the best financial side. I really like the 25 hours concept of creating strong concept plan, strong personality, but still being tailored to the location and being different in every location and being aligned with the culture of different location and different people.
Good. So you lived in Finland, UK, Italy, Netherlands. Any other countries, or those are the countries where you lived in?
And only those so far. Who knows what is next?
If each country were a dish, which one would you crave on a rainy day or a November day in Helsinki?
Okay, I will go for the classic Sunday roast. You can go any wrong in that regards. Italy, I was living in Rome. Definitely a traditional good Roman cacio e pepe, but that's kind of beaten. In Amsterdam, I would say definitely there have been fantastic burger places in there, and I would go for definitely a burger place in Amsterdam.
Okay. Imagine you're designing a hotel lobby that reflects your life story. What's the most unexpected feature guests could find there in the lobby?
That's a very, very hard question. Most in the lobby, definitely, I would say. People are surprised that I have also doing more artsy side. I like to photograph and doing art. So even if I'm in more financial background, so that could be a surprising. Maybe this is also quite traditional in quite many hotels, but art gallery, the quirky art gallery that has changing shows and exhibitions in there. So that could be an attraction by itself already.
Very good. Yes, I mean that's a great idea. If you could invest in a completely unconventional hotel concept, think underwater, in space, or something wild, what would it be?
I would say one of my favorites has been the Oriental Express, the train hotels on the train tracks. That's one of my favorites, and I believe that's going to grow strongly, and that's going to actually create unique experiences for people. And that could be one of those that I would like to expand more and see that's how that's going to progress. And also floating hotels. That's going to be a very interesting topic in the future, and I think that's going to grow not just in the Middle East or Maldives, but across also Europe.
Very good. Yeah, I mean the train travel. I mean this is a long history from Orient Express. You have, of course, tradition of going from Northern Europe, ending up in China, or you have Australia, which has some long routes. My favorite actually has been when we travel with my wife is in Switzerland to cover the Alp region on a train, and then you have this panorama view of the Alps while you're traveling around. That's been quite exciting. Yeah,
absolutely. And when you're talking about hotels, quite often it's just you're not just going to create an experience about staying inside the hotel, but it's just journey right now. It's not just any location where you go, but any whole journey, how you can reach the hotel, how you plan it, and what kind of experience that can be created for you. So it's not just the hotel is a little bit further away from the airport, but you can create experiences from the airport to the hotel for the guests. So this could be an attractive entry point, and people are willing to go for a little bit for more, I would say, adventure.
What's one quirky ritual or habit you have when traveling that nobody would guess?
I'm big advocate. I like to travel with trains in Europe, so it's much faster and convenient, and you can also work in much easier. I would say that when I travel across, I like to have quite often that I leave from different airport that I arrive to, quite often in different city, so you can utilize your time a little bit more. Let's say you travel to Rome, but then you leave from Venice airport, because you just travel and utilize your time a little bit more. And that's also how I like to plan my, let's say, holidays and vacations. That plan a little bit of a road trip across the country.
If you could rename one famous hotel with a completely unexpected name, what would you call it? So you take a famous hotel, and if you could rename it with a completely unexpected name, what would you call it?
That's quite hard question. I would say well, of course you had the brands in hotels, but I would say I would like to bring the heritage of existing building, what was before the hotel, before it was converted to a hotel, or what was before the hotel was there, what was then in the location about. Saying if there's a hotel that was before an office or something like that, maybe you can rename after the office or government official and make it a little bit quirky name, but it's also ties the location to the history a little bit more and create actually storytelling between the rooms and not just a name and a lobby, but the storytelling could go through the rooms and hallways. That and this person lived here and this was manufactured, and you could find so much history in each room that people can tell about.
What's the most unusual item you ever packed in your suitcase and why?
Most unusual item. Quite often, I've been stopped at the security because of the shoe trees. I don't know, maybe it's highlighted in a security scan, but that's something that they're surprised or they don't expect to see in any machine. So I think that's maybe
Of the shoe tree, that's good. They can be quite heavy, those high quality shoe trees.
Yeah, but then I think, but then when you travel and if you are you never know what kind of environment you end up in the cities. When I was last time in Italy, also just didn't expect, didn't check the forecast. In Venice, I was halfway to my knees in water, and then it was good to change shoes before I head into the airport.
Sure. If your life were a hotel's room service menu, what would be the signature dish on that menu?
I would say good Italian saffron risotto with smoked prawns and maybe asparagus on top of that. That could be a dish that maybe a little bit spicy, a little bit quirky, but still keeping authentic tastes and getting impressions across the world.
Very good. You should take a little bit of inspiration from Milan with the saffron risotto, and then get a little bit more exotic with the prawns, and which is a little bit spicy.
Absolutely.
Sounds like a very good dish. You worked across Europe. If you had to design a hotel inspired by a Finnish sauna and Italian espresso bar combined, what would it look like?
I would say one of the underrated things in saunas is the material that you choose, the walls and everything and choice, because nobody wants to eat or sleep in the saunas and so on. So I would choose maybe the material, the quality, heavy wood, tree trunks and everything, and then bring Italian espresso in there, so you could create a nice atmosphere between these two, but without the heat, I would say, definitely.
Yeah.
But to create an atmosphere from the sauna, high quality sauna, but then having an espresso. Or if you want to really go for an extraordinary experience, you have to go to smoke sauna and order the strongest espresso and see how you can combine these two.
That's a very good idea. Good. Okay, final question. If you could have a conversation with any historical figure in the lobby of your dream hotel, who would it be, and what drink would you order?
I'd probably, if I would invite him, I think one drink is not enough, because Ernest Hemingway, he was he also liked to have a few drinks, so I think we have to order more than one drink. And maybe you can't go wrong with bottled wine and a good company, so have to go for that.
Very good. Okay, Henri, that was a lot of fun. I learned a lot about you by answering these quirky questions, so thanks for sharing the lighter side of your story. To our listeners, stay tuned for more off the mic moments where we discover the quirks behind the careers. Until next time, keep the conversation going.